Good afternoon and welcome to this web conference with Movinn in relation to the company's annual report for 2021. The company is today represented by CEO Patrick Blok. My name is Jens Jacob Aabel Nordkvist and I work at Västra Hamnen Corporate Finance and I will be the moderator for today. We'll start off with a presentation by the company, followed by a Q&A session where all the listeners have an opportunity to ask questions using the question panel on either the right side of the screen or on the bottom of the screen, depending on the unit you are using. After you've asked your questions, I will read them aloud and then Patrick will answer them. Before I hand over to Patrick, I'd just like to say that this session is being recorded and that the recording will be available on Movinn's webpage and on Västra Hamnen Corporate Finance YouTube channel. So with that said, I hand over the word to you, Patrick.
Thank you, Jens Jacob. Thank you for that introduction, and thank you for hosting this webinar, allowing us to kind of do a condensed presentation of our recently published annual report. Very happy about that. Movinn is for those of you who is unfamiliar with us, we're a prop tech company operating within the realm of service living in Denmark. We published our annual report on the 31st of March and are now ready to go through the highlights. My name is Patrick, I'm the CEO. I've been with Movinn from the beginning, since the company was founded and was promoted back in 2017, and I'm now kind of spearheading the implementation of our long-term strategy. Some of the key takeaways from our CEO statement in the annual report was that we are finally seeing a normalization of the market after 2 years of on and off COVID-19 lockdowns. Hopefully this is the last time I have to address the COVID-19 issue. But a business like ours, servicing the international corporations that has this entire people mobility thing as part of their staffing, is obviously affected by lockdowns in the borders, lockdowns in the public sector, and similar issues. And that's now gone. From Q3, we saw a normalization of the market, and that's something we've been very happy about, and demand has been strong ever since. Some of the key events of the year was that we completed our IPO in November, raising gross proceeds of 30.4 million Danish kroner. That allows us to execute on this long-term strategy and growth ambitions that we have as a company, and that will add to some key value drivers, allowing us to grow in a reasonable pace. So that was a milestone, obviously. We have for 2021 realized a strong growth in our top line. We came out of the year with 56 million in revenue Danish kroner, corresponding to a 56% increase from the year before. Our EBITDA landed just above 6 million Danish, which is in line with the previous communications we've made, both in our guidance from the prospectus in the IPO process and also from the quarterly reporting that we did earlier in 2021. We have grown the portfolio of units. Unit growth is an important value driver because that's kind of the main growth driver in our business model, and we've grown that by 78 apartments last year, corresponding to a 35% increase, which is a strong target. The pipeline is important, and our long-term promise and aim is to grow the pipeline by 20% compounded annually. So 35 is obviously an improvement to that target. Regarding the pipeline for for 2022, or the year we're in now, we've already secured 60% of that pipeline in existing markets, which is also a good result. That having secured that pipeline so far and so early in the year makes us pretty comfortable that we will be able to deliver on the growth promise that we have communicated to the market earlier. We've also been launching. We're also launching in Malmö, securing the first international market and first international subsidiary. Will be doing a launch here in Q2. So that's also an important milestone for us that we're happy with. Doing the international expansion was an important part of our IPO and one of the main reasons for going public and raising the funds to do that. So we're happy about that. We have 7 units right now. It doesn't sound like that much, but we are continually adding to that number. Again, making us feel pretty confident that we'll have a pretty solid pipeline going out of the year. So all that is fine. Regarding guidance, we have in our annual report been guiding on some financial metrics or key financial figures besides our long-term 2025 guidance. And the guidance for 2022 is 10 to 12 EBITDA million Danish kroner range, which is up from the 6 million range, the 6 million we realized in the previous year, which is good. And we are guiding on revenues between 67 and 72 million kroner, which is a growth rate of between 20 and 28%. So I'll come back to the more detailed guidance later. Just a real quick recap of the business model for those of you who has forgotten it or haven't heard it yet. We have a very light, asset-light business model, meaning that we don't own any real estate ourselves. We are solely operating existing real estate, kind of utilizing them in another way and adding another service layer to the real estate that can kind of create an added value link in the value chain, so to say. So we don't own any properties ourselves, meaning that our balance sheets are pretty light in that sense. We also have this subscription model, as we call it, meaning that we take an empty asset and then we prep it for service living operations, and then we rent it out in bulks, normally to large B2B clients that we have in existing markets. And it's a very flexible product. It's a plug and play product. It's very highly sought after in the corporate segment, but also in other segments such as insurance and also we have some private customers as well. And the graph to the right side of the screen is kind of showing the inbound volumes of specialist foreign employees coming to Denmark, and you saw a dip in the COVID-19 crisis for obvious reasons because borders were closed, so people couldn't arrive. That is now back to like all-time record levels, and so demand is strong and back to normal. Our current presence is as shown on this slide. It has been presented earlier, but with the addition of Malmö, a very good one, as I mentioned earlier, we have 7 units in the pipeline there, and I keep growing that number to get some critical mass as soon as we are able to do it. Copenhagen is the main market, also known as our secondary cities in Denmark, but also kind of growth cities, very has some good dynamics in the local markets. And the lines I've made between the different dots is to highlight the fact that we are operating mainly out of Copenhagen and performing a lot of the kind of core activities from Copenhagen, and meaning we are relatively manpower light as well in local subsidiaries or local offices. And the reason for us to be able to do that is that we have a very strong focus on our tech development. We do that in-house. We have our own department of IT guys hammering away all day long, programming and creating good stuff. So we keep it, so developing IT and doing it in-house, so we make sure that the product is tailor-made and fit for our purposes. It's an important part of the implementation of our long-term strategy. So that's an investment that we will continue to do because we believe that it is paramount to go new markets, and be able to deliver a great service to the clients we have already. So IT is a big thing, and we continue to have that as a main implementation point in our strategy. Our financial highlights is from the annual report. Is shown here. I've added some green dots to kind of divert your attention towards some of the positives. We have delivered pretty strong growth rate, as mentioned earlier, 56%. Our EBITDA was in line with expectations and previously communications. Our EBIT was as well, and our cash flow from operation is fairly strong. We are doing a cash conversion ratio of 128%, which is a positive. That has something to do with the business model in general. People are paying up front. Some clients who is not as creditworthy as a large corporation, they are paying deposits and all that. So that's a factor that is upping our liquidity from operations. So that's a plus. We have realized an EBITDA margin in 2021 of 10.7%. That is the number is handicapped a bit by the first half of the year, which was, again, as mentioned earlier, affected by COVID-19 lockdowns. So all that considered, landing a margin of 10.7 is actually pretty good. Our ROIC is 6.4. It is also handicapped by the the results from the first half of the year, but it's improving. We have earlier, as when we launched the Q3 report back in 21, we had an ROIC of 18.8, and so that is definitely improving, and we're happy about that. Our unit numbers, as mentioned earlier, has been grown from 220 apartments to 298, meaning the nominal increase is 78, and the percentage change is 35.5. So also in line with our expectations, both in the long term and in the short term. The guidance for the year to come is communicating in the annual report, and I've taken the key kind of takeaways and listed it in bullets on this slide. We are guiding on portfolio growth and expect to end the year with between 360 and 365 units in operations. That is corresponding to a growth rate between 20.8 and 22.4%. We expect to realize revenues in the range 67 million to 72 million, corresponding to a growth rate between 20 and 28. And EBITDA is from operations, as mentioned earlier, is expected to be between 10 and 12. EBIT is expected to be between 5.5 million and 7.5 million. Regarding new markets, we are launching Sweden, as mentioned, and also working on some other interesting prospects. Nothing is kind of what can you call it? Nothing is for sure yet, so that will be communicated later if we kind of if we succeed in some of that. But we're working on different stuff. But Sweden will definitely be launched in Q2, which is also in line with our strategy and our expectations. The last one is the cost of debt. We've renegotiated some financing, meaning that we will take our cost of debt down from 4.9 to just above 4. So those of you who love financial modeling, that's a key metric that you can also take away from this. To do a recap on the long-term kind of roadmap and the long-term strategy, the long-term value driver guidance that we have relayed from the beginning. As mentioned, we are going out with a target and a promise to add 20% units compounded annually. So that's roughly 60 this year and growing to 72 the year after that in domestic markets. One apartment is expected to average between 180 and 225,000 Danish in revenue per year. We are aiming for operational vacancy, which is the vacancy rate is a product of how many kind of days does apartments sit empty. That number should not be too high, and it shouldn't be too low. But we are aiming for vacancy below 10%. The new market ambition is to launch 1 to 2 new cities a year from now on. New cities is we call new markets new cities. So if you take Sweden, there's a couple of them that are very interesting. If you look at Germany, there's also a handful of interesting markets there. So that is the ambition, and that is what we work tirelessly towards. The EBITDA margin is guided to be above 15%, and our ROIC is guided to be above 18%, return on invested capital. So if we are to track progress from the annual report to the long-term value driver guidance, I've highlighted the ones in green. Those are kind of, you can check, you put a checkbox on those, and the ones in yellow is getting there, but still has some way to go. Unit growth wise, we have realized 35%, which is better than 20, obviously. We have realized revenues per unit in 2021 of 189,000. Our vacancy rate was 10.6, and dropping. If those of you who listened in on the Q3 remember that we reported a 7.9% vacancy rate back then, so it is definitely improving. And again, that's a product of the normalized market conditions that we're seeing. So very positive. New markets wise, we're launching Sweden. I've marked that with a red dot as well on the country map to the right. The EBITDA margin is 10.7 as mentioned, and again improving. It was 16.1 in our Q3, and again an expression of normal market situations. And the 10.7 is obviously because of the COVID-19 lockdowns that we had earlier in 2021. ROIC is 6.4 and improving. So we feel pretty comfortable that we're on the right track in general. So that was the quick one. Thank you for your time so far. I will happily take questions now for anyone who might have any of those.
That sounds great, Patrick. Thank you very much for that presentation. And just like Patrick said, we can remind you that everybody's listening has the opportunity to ask questions. The question panel is on the right side of your screen or on the bottom of your screen, depending on the unit you're using. So while we await your questions, I thought I'd kick off the Q&A question with a little question about your recent launch in Sweden, in Malmö, that you mentioned. Yeah. First question is, what's the availability of units? Has it been hard to get a hold of units? Are there many units you're looking at? Can you give us some information about the pipeline in Malmö going forward?
Yeah, of course. A great question. Obviously launching 7 units is not something that I'm not sitting here with my with a too broad smile on my face. It's not that the units are not available, but it has something to do with growing the new relationships and cultivating those relationships. It always has a bit of maturity to it, so to say, and it takes time. We have experienced this in Denmark as well. When you do a new strategic partnership with a property owner or investment company or whatever, they have to feel you out and kind of get a feeling for who you are. And part of their risk management is obviously also to not expose themselves towards one kind of partner that they have no relationship with. So that takes time, and that's what that's a product of. We have some very good kind of leads so far, and we've gotten the first units in, and it looks like they're coming in at a steady pace. So I feel pretty confident that we'll get there by the end of the year. We'll have a pretty solid presence in the Malmö markets.
That sounds great. And in connection with that, you mentioned how you're able to operate kind of remotely in Odense and Aarhus because of the prop tech that you've developed in-house. So a follow-up question kind of connected to that. How many full-time employees would you say about are necessary in Sweden, in Malmö? Because of course, Copenhagen and Malmö are very close to each other. So how many full-time employees are you guys planning once you hit critical mass?
It is, you just remembered an important point there, critical mass threshold. I would say that when we have 30 to 40 apartments in the unit portfolio, we would need a full-time regional manager, so to say, like I call them a Swiss Army knife type. They have to be a little bit of everything, but their prime task will be to cultivate relationships with the clients, the corporate clients mainly. So we'll need a Swiss Army knife to kind of take on the managerial role in Sweden at that point. We'll also need a service manager, so to say, a person who will make sure that everybody is thriving and happy, and that issues regarding the units, if there are any, are taken care of speedily. And so that's like the main hiring demands that we'll have. We also need to do more handheld stuff, cleaning, etc. There's an option to treat cleaning as a variable cost in the beginning, having insourced a third-party company, and at some point when it makes sense, you can start hiring your own cleaning people. We went through the same exercise in Denmark, but for the time being, the PropTech, as you say, allows us to more or less remote control everything. The client base is very internationally oriented, so it's the same clients that has the demand. That being said, there's no doubt that we'll need a very good local resource to cultivate the relationships in the long run. We cannot sit here in Denmark and just expect everything to work on autopilot. But in the beginning, we can support it from Copenhagen, and when the time is right, the threshold maybe being 30 to 40 units, we can start to build a large organization. But luckily, because the distance is so short, we can support it from Copenhagen in the beginning.
Yeah, exactly. And in connection to that, you also aim for northern part of Europe, and you mentioned Germany in your annual report and now in the presentation. And I thought I'd take this opportunity just to ask, are there any specific factors that make Germany an attractive market for you, Movinn?
Yeah, for sure. Germany in general is just a very big part of the European engine, so to say. So Germany as a country is a key market for everybody doing business in Europe, I would say. That being said, Germany has some not mega cities, but in comparison to Denmark, for example, there's a lot of important European markets in Germany, which also makes it very interesting. The commercial activity is super high. It's no secret that we're looking at the northern part of Germany and some of the trading commercial hubs in Germany. So the cities like Frankfurt and Hamburg and stuff like that. And the sheer size of the city and the commercial activity is just way greater than it is in Denmark, and not to offend anyone, but also way greater than it is in Sweden. So Germany is very attractive and interesting to us. And the strategy going into a country like Germany would be a bit different than the one we had the luxury of kind of utilizing in Sweden, because the distance is greater. We would need to go in with a more significant impact. So we will not do a soft launches. We would do bigger projects, launching bigger projects in one go. That is the plan for obvious reasons, because that would allow us to build the organization from day one and kind of make an impact from day one. So that will be, again, we are looking at some stuff, and that's part of normal operations to go out and meet people and talk and look at potential assets and all that. And the plan for Germany is to do a more impactful launch than we have done in Sweden.
Right. That makes sense. You also mentioned in the report that you're looking at new markets domestically in Denmark, in addition to Copenhagen and Odense and Aarhus. What factors are you considering when assessing those opportunities within Denmark? Is it more to do with the relationships with current clients, what cities they feel they're missing, or is there some other factors that decide that?
That is, that's a part of it. The clients that are operating in Denmark, they have a need and like multi-city presence. So sometimes we get nudged, tapped on the shoulder, call it what somebody says that, oh, have you looked at that city or that city? We could really use some additional supply in that location or that location. And then when we get the nudge, we're not sitting around waiting for the clients to tell us what they want. We are looking at potential interesting markets all the time, and then look into the underlying growth or demand kind of drivers. What drives demand, and there is so we go in and do some specific analysis. What's present? I can give you a good example. A city like Esbjerg, for example, has a very large offshore industry, and so that industry alone is very big, and it mirrors a lot of activity in Esbjerg. There's also being some large infrastructure projects, data center buildings and similar is in the pipeline, and we know historically that will drive demand to kind of bonanza levels. So we're looking at a city like Esbjerg. That is an interesting home market for us. Also, the northern part of Europe has some interesting industries. The kind of the corporate market is always the baseline for us, and what we then can do on top of that to diversify our demand and our risk is an added plus. But we go in and look to see if there's strong corporate kind of infrastructure there already. So that's, yeah, to end, I hope I answered your question, Jens Jacob. That's
yeah, definitely. That was a great answer. I guess if we continue on the domestic front, you last year in 2021 completed the acquisition of Copenhagen Suites. And just a follow-up question, are all those units now fully incorporated into Movinn's portfolio of apartments, or are they some of them still under a startup phase, so to say?
We have 65% of them has been integrated into the Movinn portfolio. So that's the progress on that. It is an integration. It will take some time, but we have we've integrated 65% so far, and it's moving along fine. There was some differences in the way that they did their things and we did our things, so we've changed a lot and are trying to kind of up the service level and the quality. No offense intended. They had some very good apartments, and it was a very good M&A process for all parties, so it was a good one. But the short answer is that 65% of the portfolio has been integrated so far.
Right. Moving on a bit to perhaps some more global macro perspective. So the situation in today's world with the inflation and the everything going on in the world has led many to predict that a recession is kind of forthcoming, and a downturn in the economy, so to speak, could potentially happen. And I just wondered if I could get your thoughts on what that would mean for the demand effect for Movinn if there is a potential recession and downturn in the economy.
Yeah, sure. I saw the rent inversion curve, the short and the rent inverted in US yesterday or something like that. So that is normally an indicator of some unease. Recession is I would say coming. We've just come out of the COVID-19 crisis. That was a 100-year crisis for us. So nothing can kind of bring my mood down. But in the broader spectrum of things, a recession could dampen demand on this corporate segment. if the large corporations need to downsize their kind of international workforce, then that could have an effect. That being said, the corporate segment is very well diversified with us, and if you look at each corporation, I'm not going to name them as such, but if you look at each corporation, some of them are defensive, and some of them are, if you think about it in a cyclical way. So, for example, all the medical companies, they will be happy, and we don't have any, even if there's a recession going on, which we have seen also back from the aftermath of the financial crisis in the zeros. So because we have a very well diversified client portfolio, sectors that are a bit more cyclical will probably take a downturn, but then the defensive beta share, so to say, will compensate for that. And we have no client that are taking up more revenue than 2.5% in our entire portfolio. So I think we will have a good opportunity to offset those demand shocks with some of the more defensive shares, so to say, or the defensive industries, cyclical wise. Another thing is that the insurance segment, which is also beta resistant, so to say, they don't water damages and fire damages and all that. They don't care if there's a recession going on or not. That's currently only taking up roughly 10% of our total revenues. So we have a strategic opportunity there to cultivate that segment even more. So demand shocks in our core segment could be offset as well by the insurance market, which is non-cyclical.
Exactly. Great. You also mentioned the metric revenue per unit came in at around 189,000 Danish kroner for 2021. And you also mentioned the guidance between 180 and 225,000 Danish kroner, I think it was. So, question to you: what would have to happen for Movinn to reach the higher end of the communicated interval? Is it perhaps launching some new products within the PropTech portfolio, or add-on services, or anything else?
Yeah, good question. We could. The short answer is to keep vacancy levels at a strong metric. The vacancy is, if we take 2021, vacancy in the first 4 or 5 months of the year was unnormally high. So that is why the revenue per unit is in the lower range. That's kind of one explanation. The second one is that we can push add-on services. To be totally candid about add-on services, additional add-on services, it does not have a major strategic focus right now, because growing in unit numbers is a more kind of impactful value driver than being able to sell smaller secondary revenue to clients. So our ability to grow and our ability to keep vacancy levels at an attractive level is the main value driver. And the last one, which is a bit, if you want to understand the dynamics between that value driver, is that the more units we can add earlier in the year will have a positive impact as well on that number, because units being added in the year will allow that unit to kind of create revenue. When the year is up, we have, if we take 2021, we have 298 units, and if, let's say that 20 of those came in Q3 and Q4, then their kind of revenue has no full year effect. So the ability to grow, to the ability to add units as early in the year as possible, and the ability to keep them rented out as much as possible, obviously, that's kind of the dynamic behind that number.
Yeah, that makes a lot of sense, obviously. And with the inflation as high as you've mentioned in the report as well, you say that you keep an eye on it and you're monitoring it. Is it correctly understood that you have the possibility to ongoingly adjust the rents in relation to the inflation, but that there might be a slight lagging factor between that happening. And also, I guess you could add that you sometimes have a relatively high turnover of tenants, so that might help in also being able to adjust prices between tenants, as it might be more difficult if it was a long-term tenant, for example. Is that correctly understood?
How it works in practice is that once a year, our kind of cost basis will be adjusted with inflation rates. So we are monitoring on the rent level. So we are monitoring our rent. We are obviously keeping track on inflation to kind of so that we are dynamic in our pricing and not getting and having our projects being hollowed out by inflation. So we have the opportunity to kind of monitor that. But our cost base is not dynamic. It'll be adjusted once a year. So as long as we are on the forefront of that, we should be fine. And similarly, we have a few clients that are with us for longer periods of time in periods above a year. So we have an equal right, so to say, to adjust the rent levels to fit changes in the net price index. So that kind of cost can be transferred on. Let's see how the inflation goes. Hopefully we will 5-6% of inflation is not desirable for anyone, because it'll be like a death spiral at some point where the market will. But let's see what happens. Regarding energy prices, we do it more dynamically, because energy prices is something that can kind of change from month to month. So there we are monitoring it ongoingly. Our energy prices has not been that impacted, because the power we buy, the electricity we buy those from green power suppliers in out of Ørsted, the big Danish energy company, and the power from the windmills or the ocean wind parks is not as volatile as electricity being generated from other energy sources. And similarly, in the larger cities, heat and is not as volatile as if you are an unfortunate owner of a gas stove somewhere and have to heat up your house with gas. So we're not that. It's not we're not as impacted by those factors as you would be if you had a house somewhere in the countryside where where gas is like your primary energy source. Luckily. So my thoughts go out to the people with gas stoves, and hopefully they will normalize at some point.
Yeah, that's a good point. So at this point, I'd just like to encourage everyone who's listening to write your questions, and I will read them out if you have them. We can round off soon. I just have some maybe more financial questions. You mentioned that you're gonna, with the problem in supply chain and freight prices, monitoring kind of working capital, and that you're gonna up your investments in inventory coming. Is that something you can quantify, how much extra you're gonna tie up in inventory compared to a normal base case?
It's not, of course, right. We have been to kind of because energy prices is one thing, but the lead times from our factories around the world has been longer than normal, and so the furniture that we have, the furniture line we have designed ourselves, it's being produced most of it in Europe, but some of it is also coming from Asia, and lead times are just longer. So we are buying up. We are upping inventory at a point where it's a bit higher than normal. Normally our inventory levels is around 500,000, I would say, at all points, Danish. That is for us to kind of not have our raw materials being a stopping factor for our growth. And in my opinion, we will probably be upping that by 100 or 150,000 on a quarterly basis. So it's not a major kind of offset to the work capital, but it is. We think of it as prudent and as a trade-off that we have to consider, because we don't want, you know, if we can't get our raw materials, or what we should call them, then that would hold our growth for sure, and that's not a scenario we want to be in. We have a very strong demand. If I had 70 apartments more right now, I could have rented them out. We are at very high capacity as it is, so that's, we obviously don't want to delay our launches of new units at any given point.
Yeah, it definitely seems like a good trade-off, like you said, to be able to deliver the revenue and just increase minorly the investments in inventory. As I have no further questions from the audience, and you've answered my questions so well, Patrick, I think we should round off. So thank you, Patrick, once again for the presentation and for answering all my questions. And I hope to see you soon in a few months' time.
Fantastic. Thank you, Jens Jacob, and thank you everybody for listening. Very appreciated that you took time. We will keep at it.
Yes, we will.
Thank you.
Perfect. Thank you, Patrick. Bye-bye.